I'm Arslan, and this is Trading Robot. This video is about the Tesla robot. Its color shows it is a trader assistant. The blue ones are trader assistants. The orange ones are semi-automatic, and the purple ones are fully automatic. I've worked on this robot's algorithm for 3 years, and it keeps improving. The latest update was about 2 hours ago. We're refining its entry points, and I'll show you 2 key lines in the tutorial. We're always improving, and I'll make more videos. Now, let's move to the chart. In this video, we're going to We've added a robot, refining its algorithm for 3 years. Our efforts are constant. We're making its entry points precise. Now, let's discuss the robot's features and move to the chart. This video focuses on Bitcoin's 15-minute time frame. Bitcoin is around $42,700, and it's nearing a crucial point. We're trying to make its entry points more precise. We're continuously improving these, and I'll keep making videos about it. In this video, we're going to focus on the 15-minute time frame for Bitcoin. Bitcoin is currently around $42,700, and we want to see what this robot has done over the past 3 days. From the 14th to the 17th, let's see what it has done. In the 15-minute time frame, we've had a ranging market, a bullish market, and a bearish market. Starting from the 14th, we had a little drop, then the market ranged a bit, and then it went up a little. We're on the 15-minute Bitcoin chart. Let's see the robot's actions over the past 3 days. From the 14th to the 17th, we've seen a ranging, bullish, and bearish market. Starting on the 14th, there was a drop, range, rise, and another drop. Overall, the market has been ranging. Today, I'll discuss our basic strategy, the foundation for others. Let's review the market from the 14th to the 17th. We saw varied market conditions, ideal for testing. From the 14th, a drop, range, rise, and drop occurred. This robot has multiple strategies. I've preset positions and will explain them. The market is ranging, unsuitable for this new robot. This robot has several strategies. Today's strategy is our basic one, serving as the base for others. Let's start. I've set up positions and will explain their establishment, stop loss, and target. We'll review profit and loss over 4 days. The strategy, when the robot signals buy or sell. I've set up the positions, and will explain their establishment, stop loss, and target settings. We'll review profit and loss over 4 days. The strategy, on buy-sell signals, enter at candle close. Use Heikin-Ashi or regular candles. I'll test regular to show no repainting. Repainting means post-event, the candle remains. Act on buy-sell signals at candle close. Prefer Heikin-Ashi candles. Regular work too. Repainting means candles stay post-event. Enter at candles close. Use Heikin-Ashi. It reduces noise. Regular candles work, but test for repainting. Repainting means no erasure post-event. At candles close. Signal stays. Why Heikin-Ashi? Less noise. Enter on signal. Stop loss. 2 scenarios. Signal at candles close, test it. Signal remains, continues. Why Heikin-Ashi? Reduces noise. Enter at candles close on signal. Stop loss, 2 scenarios. Gray line helps set stop loss. Enter, place stop loss near line, below if buying. If selling, set stop loss at candles close. More examples to follow. As I mentioned in previous videos, we significantly reduce market noise. In this case, we enter the position at the close of the candle, when we get a buy or sell signal. Now, where do we set the stop loss? We have 2 scenarios. You see this gray line? One of its uses is for setting the stop loss. So, when we enter a position, we can place our stop loss near this line, below if buy. And if it's a sell, on sell signal at candle close, we set the stop loss. More trades. Here, it gave a sell signal. I placed the stop loss. We got stopped out, and then it gave a buy signal, set it. It's the same idea. Now, one way to set the stop loss is like shown. If you see that the open of the candle is lower than this gray line, you can place it under the candle's low. So, when the close comes and the system signals to enter, we set the stop loss. When I opened it, it was a tube. I put water here. Stopped out. Buy signal given. Stop loss placed. Set stop loss like the example. If candle opens below gray line, place below low. When close is here and robot signals, set stop loss. Set target, risk to reward ratio 1.5 or 2 based on time frame. Choosing 1.5 for this example. Higher time frame, higher ratio. Stop loss set, risk to reward 1.5. Unfamiliar with tool? Check video at page bottom for risk and capital management. Entry amounts. $100 account. Entry amount covered in video. Won't repeat. Let's put the slope here. Where is the target? Risk to reward is 1 or 2. Depending on your time frame, I choose 1. For this example, your time frame was 1 higher. You can take a higher risk to reward. I put the slope. I will do risk to reward 1. If you are not familiar with this tool, video covers risk, capital management, entry amounts. Buy 10%, 51% profitable, 20% target for 15-minute time frame. Set at 20% for simplicity. You enter. It hits the target, and we enjoy the profits. 51% of the time profitable. Considering a 20% target for 15 minutes. Different or fixed targets possible. 51% times 20 gives 10%. Stop loss above gray line. Risk to reward 1.5 hits target. Stop loss below gray line. Following risk management principles, if we proceed. Targets can vary or be fixed. Check the video. I set it at 20% for simplicity. So 51% times 20 is 10%, indicating profit. A sell signal appeared. We set the stop loss above the gray line. The risk-reward ratio is 1.5, hitting the. Here, it gave a sell signal, and we set the stop loss above the gray line. The risk-to-reward ratio is 1.5, and it hits the target. Similarly, we had a buy signal. We entered and set the stop loss below the gray line. It hits our stop loss. We're entering a sell position, and it hits the target at 115%. We got stopped. It hits our stop loss. We're entering a sell position, and it hits the target at 115%. We got stopped out twice. One strategy one mentioned, but didn't account for, is that these two stops would hit. We entered with a sell signal at the candle's close. One of the strategies I mentioned in this video, but I didn't account for, is that I've found it pretty clear that these two stops would hit. But I thought, let it hit the stop to make it look more realistic in this backtest. I'll explain how to identify when these two stops hit. We entered here with a sell signal at the close of the candle, and we set the stop loss above. We take 11% here, but actually it was 13%. We set the buy signal below the candle where we entered because it was very close. You see, we need to use these areas where the gray line has flattened out. I took it a little lower, meaning I took the close of the previous candle. You'll get the hang of these things over time. If I had taken the close here, it wouldn't have been an issue. We would have hit the target again. But these are to make your trading safer. Those who have worked with our previous robots are familiar with this area. It gave a sell signal, and we set the risk-to-reward ratio, but the target wasn't hit. Bounced back up and hit my stop loss, resulting in a minus 11%. One of the uses of this gray line is exactly this. If you use this, it won't turn into a stop loss. We reached 1%. This gray line can be used as a trailing stop loss. When you enter, start trailing. Move stop loss when line flattens for 2 candles. If 3 candles, move it there. Stop loss closes in profit. Easy. How does it work? Use it as a trailing stop loss. Enter here, start trailing. This line flattens, move your stop loss here. It flattens for 2 candles. Here, it flattens for 3 candles, horizontal. If it flattens, move stop loss here. What happens? From entry, it goes down, then up. Stop loss here, closes in profit. Easy. This is one scenario. In case it stopped out, similar thing happened. Enter trade, went up then down. Candle flattened out. It flattened here. If it flattens out, you can move the stop loss here. What happens in this case? Let me sketch it out for you. From the point you entered, it goes down, and then comes back up. Your stop loss is here, so it will close in profit. Easy. This is one of those scenarios I mentioned. Let me erase this. For example, when stopped out, we entered, it went up, then down. The candle flattened. It retraced. You could close for profit, but it didn't happen. When stopped out, it was less loss. We entered, it went up. Could have. So it went up, and then retraced. You could close it here for a profit, but it didn't happen. Or, for example, here where we got stopped out, it has the same situation. No, here it was a smaller loss. So we entered here, it went up. And we could have moved the stop loss here to close it out. Now I told you that we can tell from these light green lines that we shouldn't enter a trade here. We had a clean buy signal and took half the distance with our buys. It went up, but we're managing our risk. We got a clean sell signal. We had a clean buy that hit the target and a good sell. On the 14th day, I took the first signal. I added these up. You can add them to see the total. I reached 5 and 5 for the 14th day in profits and losses. This isn't precise, but it gives a rough idea. Here, we had a clean buy. From the 14th, I added all these up. You can take screenshots. I reached a number of 5 and 5 for the 14th day. The buy and sell signals are given by this indicator or robot. Where do we place the stop loss? At the gray line or behind the candle. For lower time frames, set the risk to reward ratio at 1.5, and for higher time frames, set it at 2. The total profits and losses, of course, aren't calculated in a precise way. They aren't linear, but it gives us a rough idea of how things are going. So, regarding these points, we learned a few things. The buy and sell signals are given by this indicator or robot, which we can use to enter trades. Where do we place the stop loss? At the gray line. If the gray line is very close, we place the stop loss behind the candle we entered. For lower time frames, we can set the risk to reward ratio at 1.5, and for higher time frames, we can set it at 2. We can use this gray line as a trailing stop loss. The line has flattened out here. Move your stop loss up, reducing risk. It's showing something specific. For example, it drew this line, indicating a resistance line. This shows a strong order block. There was a trading cluster here. The candles are tangled, indicating market indecision. This is indeed a trading cluster. Here, where it has stepped up, you can keep moving your stop loss up to reduce your risk. It might close with a smaller profit, but on the flip side, you're also preventing larger losses. But let me tell you a really important point that you'll appreciate. This green line itself has a strategy behind it. And we'll get to that. It's showing you something specific. For example, here, it drew this line from here to here. We were at a market section with a resistance line and a strong order block. How is it identified? There was a trading cluster here. The candles are tangled, showing market indecision. Looking back, it's a trading cluster. It averages this cluster between shadows, drawing a line in the middle. We're in a zone. Think of it as a zone, not just a line. If the price hits this zone, it reacts. The price reached this order block zone and dropped. Now, it's near the zone again and getting rejected. Here's an example. It takes the average of this cluster between the shadows, meaning it draws a line in the middle between the lower and upper shadows. We're in a zone here. I showed you a line, but you should think of it as a zone. If the price hits this zone, it reacts in a certain way. You see, the price came up to this order block zone, and we had a nice drop. Now we're close to this order block zone for the second time, and it's getting rejected again. Let me give you an example. We were here, and the green line was drawn for us. The price has gone up. It came up, hit this, then went up. We were here, the price has gone up again. It bounced back and went up. We had a trading cluster. It went up, hit this, then dropped. I know these two are likely to get stopped out, and I wouldn't take this signal. I can tell these signals aren't favorable. These green lines, if too close, indicate a ranging market and indecision. 3 lines formed close together. Let me erase this. I knew that these two were probably going to get stopped out, so I wouldn't even take the signal. Not that I'm a prophet or anything, but based on my experience and what I see here, I can tell that these two signals aren't very favorable. These green lines, if they get too close together, indicate a ranging market and market indecision. It means the market hasn't figured out whether it's bullish or bearish yet. Pay attention to this zone. We had this line, and we had a green line here, and another one here. 3 lines formed very close to each other. Let me erase this. What does this mean? It means the market is ranging. When such a situation arises in the market, it's better not to enter a trade. But when, for example, it starts to show those green stair-step patterns going down or up, like in this part of the market, it's okay. If they get too close together, it's risky. But you can take the trade. As you saw, I took it and showed you. So, we can use these green lines both as order blocks. Right now, if I want to give you an example in the live market, there are 2 order blocks here. We've reacted to this one twice, but we haven't reacted to this one yet. My prediction is that later on, when you watch the video, you'll see what happens. I'm saying that at least it will come here and bounce off this. Now, let's see if it gets rejected or if it can go up. But here, we react to it. Why? Because it's neither prophetic nor concise. It's a quantitative science, meaning it calculates things. It says, hey, we've reacted to this before. It takes an average of the shadows and draws a line indicating that there will be some movement in this zone, not that it pinpoints the exact spot in that zone. That's it to get this robot, Google Tesla robot. It's new, but you can subscribe monthly, quarterly, semi-annually, or yearly. It works without extra lines, works on all time frames. It works on everything. Crypto and forex use a price action strategy, finding reversals and trends. It finds highs and lows for you. You can see that without these scratches and such, it works on everything, from the 1-minute Bitcoin time frame to the daily time frame. It also works on forex like TILA. It works on the euro and US. It works on the half-hour time frame. Which one is better? It's better on all of them. And don't ask these stupid questions. It all works, and both crypto and forex are based on a strategy with a base price section, but it tries to have reversal points, meaning it is a continuation of the trend. As you can see, it tries to find the top or bottom points for you. The strategy one just shared with you is one of the many strategies you can use with this robot. There are thousands of strategies out there, and you can find your own personal strategy to trade based on that. If you have any questions, there's an orange support button up there. My colleagues are available to answer your questions. Until the next video, take care.